Hello, good evening, everybody. The time is 10:29. The date is Monday, March 30th. And this is my video on 7 tech stocks to recover quickly after the 2020 coronavirus pandemic. Let's see here. So, purpose of this video is to share with you guys 7 tech companies that I think have the potential to do really well after the dust has settled from the coronavirus pandemic. This pandemic has caused the market to be bearish, and that has created a lot of what I believe to be opportunities for people to buy value companies at a price that is lower than some of their all-time highs or some of the highs that we've seen in 2019 and 2018. The market has been very bullish for the last, I would say, 2 years consistently. We've reached record highs in the stock market. Many companies have reached record highs as well. And, as a result of that, anybody that was holding any of those positions, they did extremely well. But due to this pandemic, prices have now turned in the opposite direction. And in my opinion, this presents opportunity for either investors that may not have had too much capital, or for new investors that have always had a desire to be in the market but have yet to pull the trigger. So I'm going to share with you guys what these 7 stocks are. And one thing I gotta say, like I do want to mention, that I mentioned in previous videos as well, is that I am not a financial advisor. I'm going to share with you guys a lot of the research that I've done, the due diligence that I've done, the companies that I like, and I'm going to be very candid with the information. I also want to say that I don't take the time to edit these videos, cut them, chop them up, and make them perfect. I've got no desire to do that. And it's important as well for me to mention that I get on these recordings and I essentially just kind of start to freestyle. Obviously, I've got a bit of a sequence, and obviously there's some degree of preparation prior to hitting the record button. However, what you're going to get from me is exactly what I think, and there's no pausing, there's no muting, there's no editing at all. So I'm going to slap on an intro, I'm going to slap on an outro. I might throw on some annoying music in the background, but what you see is what you get. So if you're not following me on YouTube, please subscribe to my channel. If you're not following me on Facebook, you can reach me at facebook.com/Thyrone Network. If you're seeing this on YouTube, click the subscribe button, hit the bell notification. Just in the event at some point, I think I may start to do some live videos where I'm actually doing some live trading. Still to be determined, but I'm thinking about doing it. I'm not sure yet. I'm going to give it some thought. And I've got a lot of questions lately about, Thyrone, why are you doing this for? What's in it for you? All the information I'm going to give to you is free. I'm not selling anything at all. And, I just wanted to be able to try to add a little bit of value to my community. And, I'm part of a particular group on Facebook that really stands out. It's a BTC group. And, I remember as a young child always interested in investing. And, I knew a lot of people talked about it a lot. But I really didn't know too many people that pulled the trigger and decided to take action. So that's the reason why I've been inspired to just share a little bit with everybody about companies that I like, you know, some of the strategies that I use, you know, what my train of thought is when I'm looking at a company, and I just want to be able to give some more value. And my hope is that there's going to be some folks along the way that get inspired to decide to, you know, buy some stocks for themselves. And, you know, I think that little pebble can have an impact potentially for generations to come, provided that anybody listening decides to take action. So if you're on my YouTube channel, please subscribe to my channel. If you like what you hear, like this video. If you have any questions or comments, leave them below this video. You can find me on Facebook. You can find me on Instagram. You know, feel free to send me a friendship request. Also, feel free to challenge any of the opinions that I share with you. You know, I love constructive criticism, and I do like to engage in meaningful dialogue. So, you know, feel free to share with me any thoughts that you may have about any of the information that I share. I promise you that my skin is thick, and I'll be able to take any of the feedback that comes my way. So, here are my 7 stocks to recover quickly after the 2020 pandemic. I recently did a video on 5 stocks under the price of $5. That stock and those companies that I shared, in my opinion, are a little bit more high risk. And so you're going to see a difference in some of the names that are going to be shared in this video, but also in some of the prices as well. Don't let the price scare you, for sure. Don't let the price scare you. In my opinion, you should never buy a company because of the price. You should buy a company because of, you know, their performance, their team, their financials. You know, these are reasons why you buy companies. You know, are they a part of the fabric of our society? You know, do you use any of their products or services? And in my opinion, this is the best way for investors to think, whether they're investing for the short term or for the long term. It's my personal opinion. So with that being said, let's dive on a little bit to what some of these 7 stocks to recover quickly after the 2020 pandemic. I do want to let everybody know that all investments involve risk, and the past performance of a security or individual's trading does not guarantee future results or returns. So, very important. You know, I don't have a crystal ball here, and you know, again, this is an opinion piece. So if you've made it thus far, you know, feel free to take some notes. And again, if you have any questions or comments, feel free to go ahead and ask them at any time. My name is Thyrone Cameron. I grew up in the Toronto, Ontario area. I'm an investor. I like real estate. I like the stock market. I'm pro cryptocurrency. You know, I've made it a point in my life to try to acquire assets along the way, and you know, assets that, depending on the industry, some will spit out some cash flow, and some is for, you know, long-term appreciation. That's a photo of who I am. So we are going to dive right into company number 1. Company number 1 is Apple, and the symbol is AAPL. So when I mention the symbol, again, for anybody that's brand new, the symbol is the stock symbol that you have to use to be able to look up the company or be able to execute a buy order in the event that you are buying some of this company's stock. So let's pull up Apple exactly to see their current price as of today. So Apple is currently trading at $254.81. Apple has a 52-week high of $327, and it's got a 52-week low of $170.27. That means in the last 52 weeks, This company has gone as high as $327 per share and also was as low as $170. Here is an illustration of the 5-year chart. Sorry, not my apologies, the 6-month chart. This is their year-to-date chart. This is a 1-year chart. This is Apple's 5-year chart. You can see where Apple was 5 years ago and how high that stock went, and then you can see where the price is today. In the last 5 days, this gives you an idea of what's happened with Apple stock. Now, there was a day that we did see a large dip. All companies across the board fell at that time. This was approximately the date here. It fell as low as $214, but today it's trading at $254.81. Now, one of the cool things about Apple, of course, not just the brand, we know who Apple is, but Apple is one of the first companies to acknowledge the coronavirus and the COVID-19 illness, and it was quick to adjust and adapt. They did this by closing their stores. First it was in China, and then globally began to close some of their stores. Now stores in China are beginning to reopen. So the neat thing about Apple is that they are still selling devices online, and the moment that stores that are closed are able to open up, you can count on customers immediately funneling back into their store. Despite Apple's small-ish market share in mobile devices and laptops, the company leads the industry in margins. And one of the most incredible things about Apple is their incredibly loyal customer base. So this is a company that I'm confident is going to weather the storm of this pandemic. And so Apple is the very first company to share with you guys. I expect that Apple's going to get creative in offering incentives, probably things such as long-term financing and also trade-in programs. And this will propel their customers to upgrade devices sooner, probably sooner than they had originally planned. So, very first company is Apple. Current price $254.81. Next, Qualcomm. Symbol QCOM. So Qualcomm Incorporated, this is currently trading at $69.03 per share. It's got a 52-week high of $96. It's got a 52-week low of $55.78. Here is Qualcomm's 1-month chart. You can see where this was 30 days ago. Their 6-month chart. This is their chart year to date. So from the beginning of January up until today. This gives us the last 12 months, their year to date chart. You can see where Qualcomm was and where Qualcomm is today. Here's their 5-year chart. Alright, and so I'll talk about dividends at a video later on down the road, but Qualcomm is one of those companies that does pay a dividend. Now, Qualcomm, while America's most innovative mobile chip maker, they've lost a third of its market value in the last 2 months, falling from around $109 billion to around $75 billion today. Qualcomm is a company that still will benefit from 5G all over the world. With Asia's market slowly coming back online, and as one of the most aggressive adopters of 5G, Qualcomm's licensing and chip business could see a surge as market activity resumes and the 5G networks and device adoption picks up. So mobile device usage will not slow in the wake of this. If anything, it will accelerate, and Qualcomm will see its technology and patents drive revenue from their collective growing attachment to our devices. So despite what we're seeing in the market today, this is one of those companies that we know that outside of what happens in the pandemic, they will weather this global financial storm. I think I mentioned that they do have a dividend yield, and I use TradingView. So guys, if you want to look for a place to, take a look at some different companies, TradingView is the place to go. And it's really simple. If you don't know the stock symbol of the company, just put it in. Nike. Let's see here. Do I got anything for Adidas? Maybe I spelled Adidas wrong. Okay, whatever. Let's try Under Armour. There you go. There's Under Armour. If I want to look at Walmart, there's Walmart right at the top. Walmart Incorporated stock, New York Stock Exchange. If I want to look at, let's see, Just Energy. There we go, Just Energy. If I want to look at Pizza, there you got Domino's Pizza. There you got Pizza Royalty Corp on the Toronto Stock Exchange. So it's very simple. Put the company in that you want to take a look at, and then you can go ahead and see the details of the company and see where it's currently traded. All right, next company. Cisco. Let's pull her up. So Cisco Systems is a company that's been around forever. This is one of those companies that have been around for a very long time. Cisco Systems is currently priced at $40.32 per share. And so while Wall Street has received a lot of attention as a result of the coronavirus, Cisco is a company that is diversified. They've got a plethora of tools to support secure remote work. And of course, supporting continued growth of network and enterprise, all of which will pick up as things begin to return to normal. Now, this particular company has a dividend hovering around, not hovering around, it's actually, let's look at today's price. It is 3.71% dividend yield. And so this is a safe bet. This stock also will essentially attract investors looking for stability. So if you're looking for what I would consider to be a more safer investment, then Cisco Systems is one of those companies. They've had a 52-week high of $58.26. They've had a 52-week low of $32.40. Let's take a look at Cisco's 6-month chart. You can see where the price of Cisco was in comparison to where it is today. You can take a look at their 1-year chart. Okay, let's look at their 5-year chart. Ooh, okay, very nice. So Cisco is the third company that I predict, or I believe, has the confidence to weather this financial storm and to make it out on the other side of this pandemic that we are currently in. Okay, next company. Intel, symbol INTC. So Intel Corp is another tech company traded on the New York Stock Exchange. It's got a price of $55.49 per US. Now, it's interesting because nobody predicted something like COVID-19 to bring the economy to a standstill. But as we recover from this pandemic, Intel should see a surge in demand as both companies and schools, they must rapidly outfit their workforce and students learning online and through new improved devices. And Intel itself is a true as a data center and as a cloud computing company, and they depend on users in both residential circumstances, commercial circumstances, and industries all across the board to be able to function and to be able to guide the workforce and guide students to ultimately achieving what their objectives are. That's as a business, or in the case of students, it is completing their education. Now, looking at Intel's strong balance sheet, and this is something that I recommend for any person who may be interested in this company as an investment. It's easy to like the company's trailing 12-month cash flow. It's more than $33 billion. So this couples nicely in its for where it stands in its dominant market share in data center and in personal computers. Now, Intel has had a 52-week high of $69.29. They've had a 52-week low of $42.86. Let's take a look at their 1-month chart, their 3-month chart, their 6-month chart. This is their year-to-date chart, their 1-year chart, and their stock price for the last 5 years. Now, there's some belief that what we've seen in terms of the market dip is just the beginning. There's many who believe that things are about to get a lot worse, particularly in the financial markets, before they get better. So I am not trying to suggest that now is the perfect time to be buying these companies. I do want to just stop for a moment and say that. But I do think that this crisis presents an interesting buying opportunity in our generation. So it is to be said whether or not we've seen the bottom. I'll reserve my opinions about that. But I do think, nevertheless, if you don't have any of these companies on your radar, at least after watching this video, maybe you now do. So for a moment, I just want to, if you made it thus far in the video, do me a big favor, subscribe to this channel, hit the like button, hit the share button, tag a friend who could benefit from seeing this. And I also want to say as well that, some of the prices of some of these companies may deter you from wanting to invest, and I don't think that it should. I think that with some very simple discipline, putting away a fraction of your earnings on a consistent basis, to be able to put a sum of money that's appropriate to be able to buy some of these companies, or one of these companies, or two of these companies, I think would be a wise investment in your future. So again, that's personal opinion, but I want to take a quick moment. If you're still here with me, if you've made it this far, good for you. I think that these days it's a challenge for people to sit and to listen, watch a screen, take notes. So if you've made it this far, good for you. All right, next company. So the next company is a company that I'm sure that many of you have heard of. It is the juggernaut that is Amazon. All right, let's pull this up. So Amazon's price per share is $1,963.95. All right, so Amazon has been a staple during this crisis, with a massive increase in online sales amid consumers shunning in-store services for deliveries in the wake of shelter in place of orders and a general wariness to leave their homes. Amazon has been a go-to. While many businesses are struggling, while many businesses are finding it to be very challenging time to be in, Amazon is thriving. Amazon is hiring. Amazon's not only hiring in their warehouse, but they're also hiring in their for their delivery drivers as well. I know some people that work in Amazon, and they're busy. They're busy. They're overwhelmed. They've seen a huge increase in online orders. No surprise. And in a moment like right now, a company like Amazon will excel, and they will grow, they will thrive, they will adapt, and they will continue to provide not only value to shareholders, but a ton of value to their consumers and their end users. Now, it's interesting because one of the things that won't surprise me is when we start to see Amazon get into spaces that they're currently not in. It is inevitable that some companies won't survive this economic downturn, and that will translate into near-term hit for Amazon in terms of the business that you saw going to certain companies as consumers walked into their retail stores. They will turn now to Amazon as a solution. Now, specifically Amazon's cloud-based data collection division, it did hit around $10 billion in revenue last quarter, representing about 11% of the parent company's revenue, which is very interesting. And so I think that business itself will continue to shine as a critical business service. So, companies that are impacted by COVID-19 will depend on Amazon's AWS cloud computing business to get their operations quickly back up and running. So Amazon's 52-week high, let's take a look at it, with a 52-week high of $2,185.95. 52-week low is $1,626. Let's take a look at their 1 month chart, their 3 month chart, their 6 month chart. We'll take a look at the last 12 months. Now let's take a look at the last 5 years. What a company to have invested in back in April of 2015. You could have paid $400 a share for Amazon, and today each share would have been worth over $1,900. What a return on your investment. Okay, so everybody knows Amazon, but it is, it's an expensive stock to own. One share is gonna cost you $1,900 US. So again, I'm sharing with you guys another company that I'm confident is going to weather the storm. Tech company, solid tech company, always innovating, strong leadership, and I would say a company that has proven that despite what's happening globally, they have the capability to adapt. They have the capability to still offer an attractive service to consumers. Okay, next company. Next company is NVIDIA, symbol NVDA. Now, NVIDIA Corp is currently traded at $265.59. What is NVIDIA Corp? So artificial intelligence and machine learning, they're going to get even bigger given that data science is at the forefront of the medical and research companies' efforts to understand, contain, and develop treatments and vaccines for this pandemic and to plan for others. NVIDIA has some of the most robust frameworks for machine learning, and the company had made its Parabricks tool free for 90 days to biotech and research companies looking to flatten the coronavirus curve, develop therapeutics, or expedite vaccinations. I'm not a fan of vaccines. That's a whole other video. At the same time, more people are playing video games as their cities went into lockdown, and sales of NVIDIA chips and services like GeForce now have all likely seen an increase. The company has a very strong cash position with over $10.9 billion in cash and equivalents as of its last earnings report in late January. So this, coupled with very long and low-term long debt, it bodes well for this company. This company does pay a dividend. Its 52-week high is $316.32. Its 52-week low is $132. This is one of those companies that will make it through this pandemic that we're currently in. If this is not a name that you're familiar with, if you're not familiar with what this company is doing, I highly recommend that this is a company that you guys look a little further into. This is a company that is innovative. This is a company that is forward thinking. And, this is a company that, in my opinion, will be here for years to come. So do your own due diligence. Take a good look at this company. But this is my next pick. Now, what do we got for you next? Oracle. Symbol ORCL. So Oracle Corporation is currently trading at $50.36 per share. It's got a 52-week high of $60.50. It's got a 52-week low of $39.71. Take a look at their 1-month chart, their 3-month chart. This is their chart year to date. This is the last 12 months. This is the last 5 years. Now, Oracle, the company's earning report amidst the storm, showed its best revenue growth in 2 years. This, however, doesn't take into consideration the current quarter and the global impact of the coronavirus. COVID-19 is sure to have an impact on Oracle's share price. I expect that the company will see loss or deferred revenue as a result of COVID-19. That aside, about 71% of Oracle's earnings are recurring. This is good news, which means that as long as their clients stay in business, the company's income statement is largely in good state. So given that Oracle claims some 97% of the Fortune 500 as customers, you can expect the company to come out of this in very good shape, or in pretty good shape. It also helps that Oracle is trading at 10 times their trailing earnings, at the low end of its usual 9 to 19 times range. Now, let's take a look at Oracle's dividend yield. It's paying at 1.93%. This is another one of those companies that, in my opinion, will stand the test of time. The services offered by this company, the user base that this company has, if you're looking for an investment that is relatively deemed to be safe, this is one of the more safer places to invest your money. That is not financial advice. That is my personal opinion. I must stress that. Okay, so what have I got for you next? I got nothing else. Those are my 7 picks for the best tech companies to get involved, to take a look at in 2020 during this pandemic. We've got Apple, we got Qualcomm, we got Cisco, we got Intel, Amazon, Nvidia, and Oracle. Please like this video, share this video, subscribe to this video. And look, there's a lot of people that talk about investing. There's a lot of people that talk about, getting involved with the stock market. It's not difficult to do so. Don't be the person who's reading books for the next 4 to 5 years. Don't be the person who never pulls the trigger. Don't be the person who says that they're waiting for an expert. Don't be that person. So if you like what you see here, like this video, share this video, give me your comments, give me your feedback, and invest wisely, do your own due diligence, proceed always with caution, always invest what you can afford to part ways with. This is not for the person who is having difficulty paying April's rent. So proceed with caution, and feel free to add me on Facebook or add me on YouTube. I appreciate you guys for listening. If you stuck with me this far, good for you. Go change your family's course. Go plant some seeds for the next generation. I appreciate you guys listening, and stay safe during this pandemic, and don't forget to be kind to your neighbor. Take care.